welcome. You're watching the Business Today show. I'm Sakshi Batra. First up, the top news we're tracking for you tonight. Markets recover from the scare of a war in West Asia. Stocks rise, gold and crude oil fall. Oil marketing companies also recover after a day of uncertainty and heavy sell-off. Top experts are questioned if the world is getting immune to geopolitical tensions. The International Monetary Fund hikes India's 2023 growth forecast to 6.3%, downgrades China's projections to 5%, says the global economy had shown remarkable resilience as it continues to recover from economic shocks. Unemployment hits a 6-year low in year ending June 2023. NSSO survey pegs the rate at 3.2%, down from 4.1% a year ago. Rural joblessness also at 2.4% versus 5.4% in cities. Crackdown on alleged money laundering by Chinese mobile companies. MD of Lava International taken into custody. Chinese national also among 4 arrested under the PMLA Act. Cash seized during raids yesterday on premises of accused. More than 1,300 Indians have a net worth of more than 1,000 crore rupees. Their total wealth of 109 lakh crore rupees exceeds the combined GDP of Singapore, UAE and Saudi Arabia. This and much more in the Hurun Rich List for this year. Straight on to the top story tonight. Well, one of the biggest modern-day conflicts involving a massive terror attack and a counter-attack which could stretch on for days. And as Petroleum Minister Hardeep Puri said yesterday, the action is happening at the epicenter of global energy. The reaction of the markets on Monday was predictable. Everything was red. But today, just a day later, crude prices have cooled off, equity markets have rallied and gold prices have slipped. How did the market stabilize so soon? Business Today television's managing editor Siddharth Zarabi has spoken to a panel of experts, and here's an excerpt.
Indian markets demonstrating resilience. Why is this?
It's a function of domestic flows. So even though we have seen FI outflows for the last 2 months, domestic flows, as they did in 2022. Domestic flows are keeping the markets well supported. The second big part would be the macro is good. The policy environment has been very conducive for the companies to grow their revenues and earnings. And the third is that it remains a huge portion of the market remains domestically focused, for example, finance or automobiles or industrials, capital goods, all the sectors that have been doing better, apart from finance, I would say, have been more domestically focused. There's a bit of bother on IT, and I think that will stay for a couple of quarters more. Till the global macro sees more better growth coming in. But overall, it's the makeup of the market, makeup of the flows, and a strong macro, a good policy environment. It's a function of all that.
Where the global economy, and especially the US economy, stands right now, what would you have to say to our viewers?
Well, first of all, I think you've had the market reaction that you would normally expect. The dollar was firmer. The US bond market was, of course, closed yesterday, but you saw a big drop. You've seen a big drop in yields today, which you would expect as a sort of flight to quality. You've seen at least initially, a flight away from risk, but US equity started to rebound relatively quickly. And of course, the big macro development from all of this is rising oil prices with about $4 put on the price of both Brent and WTI. I think what that's telling you is that most observers hope and believe that this will be limited to this albeit this very tragic situation. The risk to markets from here, I think, will come from if this has really escalated into an outright conflict with Iran, and I'm not going to comment on that specifically. Against this background, the U.S. economy has a very good chance of pulling off the soft landing, if you like, because inflation's probably going to tick a bit lower this week with the September numbers, 3.6 or 3.5. Obviously, the growth of the economy remains reasonable, decent, I think it's fair to say.
Is crude the biggest risk for India at this point of time?
So, Siddharth, I think even RBI in their projections have accounted that if oil stays around in the 90s, I think they've really made their calculations with that assumption. And I think the same is with the global markets. I think markets have accepted the reality overall that crude is not going to, stay in the 70s, which was a pre-COVID times. So it's, I would say it has kind of become a weapon of sorts. I think, Siddharth, we have to look at two things separately, but then in kind of correlation. As the United States has kind of weaponized the dollar, Middle East and OPEC has kind of weaponized the crude oil. Now, these two kind of plays, the markets will have to accommodate and adjust the valuations accordingly. I think as long as it stays in the 90s, it's fine. The crude creates a turbulence in the market if it starts breaching that 100 limit and goes beyond. And I think there are enough forces, even from the United States and otherwise in the NATO alliance that are trying to keep that level below.
The International Monetary Fund has renewed its confidence in the Indian economic story by raising India's GDP forecast for 2023-2024 by 20 basis points to 6.3% on the back of stronger than expected consumption during April to June. However, inflation estimate for the year has also been raised to 5.5% before it was seen easing to 4.6% in the next financial year. The IMF, meanwhile, has also revised China's growth forecast downward by a similar amount, 20 basis points to 5% for 2023. However, it has kept the global GDP forecast unchanged at 3%, citing the rising geopolitical tensions between Ukraine and Russia, as well as the escalating conflict between Israel and Hamas.
We have to be cautious. I think it's too early to really assess what the impact might be. And as you pointed out, of course, this happened after our round of current projections was closed. But we would have to wait a little bit before seeing what the impact might be. Of course, we all hope for a rapid de-escalation of the conflict and an end to the violence.
Well, equity markets settled sharply higher today, tracking global cues, recouping from the Israel-Hamas crisis. A drop in the crude oil prices and a dovish commentary from the U.S. Fed supported the sentiments at the Dalal Strait. We did see investors ending up earning more than 3 lakh crore rupees in the markets today. The 30-share pack, Sensex, gained 567 points to end the session at 66,079, while NSE's Nifty 50 jumped 178 points to end the day at 19,690. The top Nifty gainers today were Coal India, Adani Ports, Airtel, and also Kotak Mahindra Bank and also Hindalco. While on the other side, on the top Nifty losers front, we did see names like IndusInd Bank, Cipla, TCS, Dr. Reddy's and Titan featuring on the list. And all eyes are now on the IT bellwethers as Q2 earnings season kickstarts tomorrow with TCS reporting its numbers first, followed by Infosys and HCL Technologies a day after. The big question is, will IT firms show promise in a seasonally strong quarter? I earlier spoke to Vineet Polinchkar, Head of Research at Ventura Securities, to find out what should be investor strategy right ahead of the IT earnings. And here's an excerpt. Indian IT sector. It had a somber start to the FY24 earnings season, and now the Q2 earnings season will start tomorrow with TCS first reporting its numbers. Day after it will be HCL Tech and Infosys also. What are your key expectations this time around, especially because second quarter is usually seen as the strongest quarter historically for the IT companies? Is it going to pan out like that, or are things going to be different?
So, in anticipation of what you've just said, it's been a typical cycle that, it starts on a somber rating and then catches up as announcements come in terms of the buybacks and dividends. I don't expect great shakes to take place or firecrackers of performance out here because there is severe challenges on the demand front and that is going to persist. And so, I believe that avoiding these IT stocks and playing the cyclicals and the domestic oriented themes is a far better strategy than to just play the IT stocks. And if you have been doing that so far, you have not missed out a lot.
Name top 2 expectations of best earnings versus worst earnings that could come about. What would you name?
It's a little tricky question, but I think TCS will surprise the market and on the upside. And I think KPIT is one of my top picks in the mid-cap space.
Okay. In terms of the buyback, since you talked about TCS, what are your expectations? What would you advise investors to watch out for?
I think anything above 16 to 18,000 crores is a very, very good number to go.
Has reclaimed his spot as the richest Indian, overtaking Gautam Adani for the top position. According to the 361 Wealth Hurun India Rich List of 2023, released earlier today, there are 1,319 individuals in India with a net worth of over 1,000 crore rupees, up from 216 over last year. The cumulative wealth of these listed is 109 lakh crore rupees, which is more than the combined GDP of Singapore, UAE and Saudi Arabia.
The gods have smiled at Mukesh Ambani. The chairman of Reliance Industry is the richest man in the country again, overtaking Hindenburg hit Gautam Adani in the 361 Wealth Hurun India Rich List 2023. The annual list released Tuesday puts Mukesh Ambani on the top with the wealth of more than 8 lakh crore rupees. Gautam Adani is the distant second with a net worth of 4.75 lakh crore. Vaccine king Cyrus Poonawalla, IT czar Shiv Nadar and the UK-based Gopi Chand Hinduja complete the top 5 list. According to the list, 12 Indians have a net worth of 1 lakh crore rupees and more, and the number of Indians with a wealth of above 1,000 crore rupees has risen by 76% in the last 5 years and now stands at 1,319. There are 278 new entrants in the list this year, and their cumulative wealth is a whopping 109 lakh crore rupees, more than the combined GDP of Singapore, UAE and Saudi Arabia. 55 people have, however, dropped out of the rich list. Prominent among them, Baiju Ravindran. The EdTech entrepreneur has been significant investor markdowns in the past couple of years, with his company's valuation dropping to $5 billion from a peak of $22 billion just a year ago. Youngest on the list is the 20-year-old Kaivalya Vora, the founder of Zepto. The youngest woman on the list is 38-year-old Neha Narkhede, co-founder of Confluent. The oldest on the rich list is M.R. Mehta, the 94-year-old founder of Precision Wires India. Ratan Tata also finds a mention in the list as a corporate baron in the maximum number of social media followers. The chairman emeritus of Tata Sons has more than 12 million followers, hanging on to his ever post. Number 2 on the social media popularity stakes is Anand Mahindra with more than 10 million followers. Bureau Report, Business Today Television.
For more on these revelations, I earlier spoke to Anas Rahman Junaid, the MD and Chief Researcher of Hurun India, and Yatin Shah, co-founder of 361 and joint CEO of 361 Wealth as well, to understand what are the key insights. Here's listen in. And what are the other key trends that you've spotted in this report? Let me start off with Anas first.
Hi, thanks, Sakshi. Thanks for the opportunity. This, as you rightly said, from our perspective, the 361 Wealth Foreign India Rich List is all about trying to speak about the story of Indian economy through the eyes of entrepreneurs. So it's been a fantastic year from an Indian context. Just to give you a perspective, when the China Rich List has lost about 10% of their entrepreneurs this year and last year, India has gained about 278 entrants to the 361 Wealth Foreign India Rich List, and we've added 38 new billionaires to the list. Mind you, the dollar has appreciated 3% against the Indian rupee. Despite that, we've added 38 billionaires. If the currency was the same, it would have been 50 plus. It's been a great year. All the sectors are performing, except for startup ecosystem. But generally, everybody is performing well. All the sectors have produced new entrants. It's a great year from an Indian context.
Okay, we'll dive more into the details. Yatin, let me bring you in. What your report also brings out is a mind-boggling fact that the cumulative wealth of these listers has surged to over 109 lakh crore rupees. That is surpassing the combined GDP of 3 countries, Singapore, UAE and Saudi Arabia. What does this go on to tell us?
I think the wealth number becomes a way of ranking and just letting one know the kind of prosperity and wealth creation as an opportunity in India. But I think the big picture out here is to see what's happening in terms of the growth story of India and the wealth creation through way of entrepreneurship. I think entrepreneurship is getting democratized. What I like about the list is the participation coming from more than 90 plus cities of India. Yeah. And to the surprising the fact that Tirupur, has entered the top 20 list. And Gujarat itself, from 4 cities, Surat, Rajkot, Ahmedabad, and Baroda, and we call them Tier 2 cities, have almost 110 as a number of 1,000 crore plus wealthy individuals and families. So my excitement more from his perspective that gives you a trajectory platform what India has built and where an entrepreneur with having great ideas gets a way to kind of build an enterprise, and India offers them the growth opportunity which leads to what is known as wealth creation. So it's more of a celebration of entrepreneurship spirit in India.
Anas, coming to you, what is the outlook going forward given the macro landscape? Everybody is talking about that this is going to be India's decade, and are we going to see more wealth creation, more people participating? What is your own sense of how do we see this list growing, both in terms of diversity and the addition of the numbers too?
In 2012 Rich List, the threshold to enter the top 10 was 30,000 crores. Now it is about 1,20,000 crores to enter the top 10, right? A number of billionaires in the 2012 list was about 57. Now it is 259. Then number of individuals with a net worth of 5,000 crores in 2012 was about 60. Now it is 408, right? So, and during this time, if you can see the super wealth creators, they have grown in multiples. And during this period, India's GDP grew by 88%, over the last, from 2012 to now. So in the next 10 years, where we expect the GDP is going to double and so on, funnel is going to further increase, and the wealth creation story in India has just gotten started. I think it's going to be very exciting next set of years. My only hope is we have more wealth creation happening from the futuristic sectors like space tech, sustainability, clean tech, AI, and so on. And if India could lead that part of wealth creation, that'd be fantastic.
Wonderful. Yatin, over to you with the same question.
I think structurally, both external factors supporting the growth for India and both internal factors, what we call is the 4Ds, demographic, demand, digitalization, and democracy, which is what we call is our era, which is allowing an entrepreneur to come with his own idea. There's no dearth of capital for good entrepreneurs, good businesses, which means the wealth creation as an exercise, entrepreneurship exercise is getting democratized. There's no face to money. And that is an encouraging sign the youth of India will first try his hand to become an entrepreneur. And that's a sign to say that, more and more opportunity for more and more Indians and Indian entrepreneurs.
America runs on women, and that's what this year's winner of Nobel Prize for Economics says. Claudia Goldin, a Harvard University professor, also recounted her own experiences with her studies of the role of women in the labor market and how economics is often misunderstood by young college entrants.
America runs on women. And we noticed that during the pandemic, when women were being pulled back into the home because of their work and because of childcare, it's pretty clear that their own productivity went down. They had to take care of their children. They had to do their work. Their labor force participation, by the way, did not. And that is what has given rise to that question, that in fact we see the most amazing thing, which is an increase, and that may be due to the fact that with a continuation of remote work, we have a reduction in commuting and an ability for individuals no longer to work part-time, but to work in the office and somewhat at home. Change is important. Change is interesting. Therefore, men are boring and women are interesting. So as labor force changed in the mid to late 20th century, as the labor force began to change and women began to enter the labor force, men's hours of work was sort of stable. Their labor force participation rates were sort of stable. And so economists looked at the fact that this group had great change. They were interesting. And the question was, why are they entering the labor force? Why some are entering and not others? What is it that I have studied? And there are really two sides to this subject, or at least two. The first concerns women who throughout history have often been hidden from view and often uncompensated in ways that men have been by an economic marketplace. They have over time left that arena of home or family farm or family business and moved to the greater arena of market production. They've become workers. They have begun earning a living for themselves and for their families. Their lives have greatly changed, but the labor market and the policies of governments are often slower to respond.
And with that, it's a wrap on this special edition. Many thanks for tuning in, but do stay tuned on to catch all the updates from the world of general news.